Hello and welcome to Livewire's Buy, Hold, Sell. I'm your host, Eley, Selby, and boy, have we been receiving a lot of requests from readers asking for fundies' thoughts on emerging resources and material stocks. So in this episode, we'll be discussing 5 up-and-coming companies across uranium, copper, lithium, and gold. And to do that, we're joined by Tim Serjeant from Eley Griffiths Group and David Franklyn from Argonaut. First up, we have battery materials, exploration and mining company, Liontown Resources. Tim, I might start on you. Is it a buy, hold or sell?
Sell, Eley. Look, it's been a great place to be. Large, undeveloped hard rock spodumene asset in Western Australia, but at $3.5 billion with still 700 or 800 million to spend, I think we've probably seen the best of it.
David, over to you. It's had a spectacular run over the past 12 months. I actually think it was one of the best performing small caps. It's risen at more than 654%. Is it a buy, hold or sell?
Yeah, Eley, look, we love the asset, but we balk at the valuation, so it's a hold for us. Look, it's got a lot of attributes that we like. It's a large, high-grade lithium resource in a tier 1 location, just out of Kalgoorlie. So a lot going for it, but the valuation is a bit stretched.
Next up, we have Pilbara Minerals, which recently announced a new joint venture with South Korean company POSCO. David, staying with you, is it a buy, hold or sell?
Look, we rate Pilbara a buy. It's our preferred lithium exposure. Basically, it's in the right place at the right time. It's a large-scale producer at a time when the lithium price is continuing to escalate. As you said, they've just announced a processing joint venture with POSCO, which we view very positively. And, they probably did the deal of the year last year when they bought the Altura lithium operation from the receivers at a very good price. So they're ramping up production. They've got processing now underway, and it's our preferred exposure, so it's a buy.
Tim, it has a market cap of 6.6 billion and its share price has risen over 515% over the past 12 months. Is it a buy, hold or sell?
Buy, Eley. It's relatively better value amongst the lithium names, I think, at present. Look, David's right. It's got volume growth where others don't at the moment into a record pricing environment, and it's inherently scalable as the market continues to grow.
Tim, staying on you, next we have struck gold with De Grey Mining. Its share price has been quite a volatile ride for shareholders over the past 12 months. Now it's pretty flat. Is it a buy, hold or sell?
Buy, Eley. 500,000 ounces per annum for over 10 years in Western Australia makes it a tier 1 asset in a global gold context. There's just 2 issues to monitor over time, I think, which they're both of which are intertwined, which is capex and recoveries. I think both are eminently solvable. It's just whether it's De Grey or someone else.
David, over to you. It has a market cap of around 1.4 billion and it recently completed an institutional capital raise of around 125 million. Is it a buy, hold or sell?
Yeah, look, we've got it as a buy, Eley. It's a tier 1 asset in a tier 1 location. It's going to be attractive. It's either going to move through development and become a global producer of scale and be well sought after, or else, just as likely a major will look to acquire it, relatively soon. So we like it.
Next up, we have copper exploration and mining company ASX Resources. It's a bit smaller than our other stocks that we're discussing today. It has a market cap of 423 billion. David, staying on you, is it a buy, hold or sell?
Eley, we rate ASX a buy. They've got an undemanding valuation. It's well managed, and we expect that sort of corporate activity will be a key feature of the group going forward. They've currently got a small copper operation in Cobar and a gold mine in Queensland. We think there's a scope for some consolidation in the Cobar copper space. We know that Glencore are looking to sell their CSA copper mine, and they've shown that they're acquisitive for gold assets. So we're backing the management team there to add value over the course of the year.
Tim, over to you. It's also had a stellar 12 months. Its share price has risen around 216% over that period. Is it a buy, hold or sell?
Buy, Eley. The asset base is improving. I think we're going to see down the track better production at better costs and probably longer mine life. The business is now net cash, having been capital constrained for a significant period of time. I like that. And I think M&A can move the needle, as David touched on, and I'm willing to back them on that strategy.
Okay, last but certainly not least, we have uranium company Paladin Energy, which operates across Africa, Canada and Australia. Tim, staying on you, is it a buy, hold or sell?
Buy, Eley. Look, I don't expect it to be smooth sailing from here, but at the end of the day, we're still relatively early in the uranium cycle, in my view. The industry has been capital starved, demand tailwinds are emerging, and I think Paladin's the cleanest way to play that on the ASX.
David, Paladin's share price has risen a whopping 625% over the past 12 months, thanks to a rising uranium price. Is it a buy, hold, or sell for you?
Eley, we've got it as a hold, really on valuation terms. The uranium stock we prefer is NextGen, which is listed in Canada, has a Canadian project. And what we like about it is just the scale and grade of their project. Still relatively early days, but has the potential to be the lowest cost producer globally.
Well, I really enjoyed that episode of Buy, Hold, Sell, and I hope you did too. Remember to subscribe to our YouTube channel. We're adding new content every week.